Good afternoon, ladies and gentlemen. I'm happy to welcome all of you on our webinar with Dr.Elder. Today, as usual, we will have this webinar as we have it each month. And of course, it will be great to hear Alexander's opinion about markets and of course, to get some pieces of his experience and to educate ourselves in terms of trading and in terms of investing. But before we start, as usual, I will say some words. First of all, as I usually start is risk disclosure. So it's really important to understand that trading and investing it's something which involves risk. So firstly, you need to understand how it's work, like what risk can be. And of course, we also during our webinars, during all our webinars mention this part. So I just want to warn you time that all activities are involved risks. And also for those who joined our webinar for a very first time, I want to say some words about our company. We are Admirals. We are a brokerage company, so we are working for more than 21 years already. We approach like different countries, different jurisdictions. So right now, besides those licenses like in SISEC or FCA in the United Kingdom or in Australia, which we have, we also got a license like in South Africa, and also we applied for a license in Canada. So we do expansion like in different countries, in different regions. So other regions and other license will follow. But what is important, we provide a service for traders and investors. So we offer trading and investing solutions. So first of all, our clients can trade with leverage, like based on jurisdictions and license. And also we offer general investing opportunities, so we can form your portfolio, adding different stocks like European stocks, US stocks, of course, different ETFs, and to build long-term portfolio. As also like one thing happened like several months ago, but I'm still because it's really good thing which we implemented. It's a possibility to have fractional shares, so you can buy starting from February only part of some big stocks. So right now, if you see, let's say, some expensive stock which costs, let's say, 1,000. So right now it's possible to get only a piece of it and to form your investing portfolio. Of course, for some traders and investors, we have copy trading offers, so it can be checked in our traders room, or you can discuss it with your personal manager. As I mentioned, we really thankful to Alexander that he joined us each month to share his expertise, because we at Admirals pay a lot of attention to education. And I also want to share with you some useful links and to encourage you to subscribe firstly to our YouTube channel, because we normally share all content there, and also that webinar will be added on that channel. And later on, I will also say some words about contests which we have also on that channel. So please subscribe if you're not. Just yesterday we reached 30,000 subscribers on that channel, and thanks for all who already subscribed. And also we do have a Telegram channel where we also share some latest news, some information about upcoming events. So you can subscribe, so just not to miss our next events, which we are planning and will do, let's say, next time. So for today, because I also asked before Alexander joined, like about new participants on that event. So for today's agenda is we will go through the main markets. Of course, it will be interesting to hear Alexander's opinion about current situation, because a lot of rumors about correction which we have right now. So maybe it's a point, let's say, to start to form a long-term investing portfolio. So I also asked Alexander to say some words about that part. We will do some specific stocks overview, like beside across Alexander's approach, and a lot of other things will be mentioned today. And of course, in the end of the webinar, I will say some words about Alexander's indicators, which can be taken from, which can be used on our platform. So, and later on, I will also say some words about contest of which we have, where it's possible to get Alexander's book with his personal signature. And After this short introduction, I want to pass the microphone to Alexander. It's every time, each month, it's a really pleasure to hear you. And it's really, again, we're really thankful that you join us like each month. Yeah, Alexander, the microphone is yours.
Thank you very much, Roman. It was very pleasant last month. I was in Tallinn, Estonia to see you, to shake a hand. And thank you very much for these wonderful souvenirs you gave me. Thank you. While I was listening to you, I was looking into the chat room and I saw we have a participant there from Abidjan, Ivory Coast. Brought back memories because many years ago, decades ago, I was working on a Soviet ship and I jumped ship in Abidjan, Ivory Coast. My first stop in the free world was at the American Embassy in Abidjan. I never expected to see a trader from Abidjan. So in a way, I feel that it's the closing of the circle. Back when I was there was President Joafe Boigny, who's been dead now forever. Abidjan went through all kinds of troubles, but I'm glad that things are apparently developing. Otherwise, there wouldn't be traders there. Welcome aboard. Today is actually an important day, thinking of my past in the Soviet Union and beyond, before I escaped communism and came to America. Today is a big day, actually, in Russia, because 81 years ago, fascist Germany invaded Soviet Union. They began by bombing Kiev, the capital of Ukraine. We know how that war ended with the trial in Nuremberg and hangings of war criminals. 4 months ago, now the Russian fascists bombed Kiev and invaded the country. And the war is still going on. And I very much trust that it will end the same way as the Second World War did, with the liberation of the country from aggressors. So, but enough about politics. You're not here to listen to my views. I know that some people may have different and even opposite views. Let's move on to what I know much more about, and that is financial markets. So, as always, we begin by looking at key indices, and Roman asked me to focus specifically on what I need, on what I think about the US markets today. So Roman, you tell me how you want to handle it. We can go through all the markets, or we can spend more time on the S&P, in which case I would like to show maybe a couple of my charts after we review yours.
Yes. So we can, because it's like mostly important to understand like what's happening in the US market, so we can stay for a little bit longer for.
All right. So I began saying in December that we're going into a bear market. So now we have an official bear market, which happens when the US market declines 20% from the top, completely artificial parameter. There were signs of the top much earlier than that. And speaking of Estonia, there was I wrote an article for an Estonian newspaper back in January saying Estonia was still going up at that time, saying, wait for the bear, Estonia is about to be hit, and it was. So the signs of a bear were there. And you can see on this market, on the left side of the weekly chart, the S&P was almost 5,000 in September, October, November, and now it fell to almost 3,500. So it lost quite a bit. What is the driver? What is the driver of the bear market? The US had very amidst all this pandemic and 1 million people died, the economy of America had a wonderful time, primarily because the Federal Reserve pushed huge amounts of money, but huge amounts of money into the markets. And in January, they began saying that they're going to suck that money back out of the market. And there are certain methods they do it. They do it by raising interest rates. They also do it by calling back the money that they put in. So if before money was coming in, now money is coming out, and the market is declining. Lots of gamblers came into the markets, all these beginners buying Bitcoin, buying high-tech meme stocks. And by now, they're pretty much, the profits that they made in those 2 years are now pretty much all gone. So it's not really, in terms of big economy, it's not really the happiest situation. There is a pretty strong consensus that the US is headed into a recession. Hasn't started yet, and of course, what's very important to keep in mind, that bear markets bottom out before the recession ends. The recession is still getting worse and worse and worse, and the market already reversed up. So don't wait until the end of the recession to start buying. It has to be done much sooner. So that's what's driving this market down. However, even though we're in a bear market, every bear market has corrective rallies. And my studies show that we are entering into one of those zones. I would like to show you, so here on the weekly chart, basically what you see is that the weekly bars are way below the envelope, meaning that the market is hugely undervalued. MACD histogram has ticked up already this week. At the right edge of the chart, there was an extreme spike of force index, so the weekly chart looks very bottomy. The daily chart doesn't show anything very special yet. When you turn to the right side of the chart, you can see a deep bottom of MACD histogram, deep bottom of force index, but there is really no divergence there. So the weekly chart looks better. The daily chart is still a little half-baked. But let me show you a couple of things I'd like to review with you. So where is it? Here. So this is one of my I have some favorite charting tools, and one of them is charting analytic tools. And one of them is the new high, excuse me, new high, new low index. I believe it's the best leading indicator of the stock market. And I want to show you the weekly new high, new low index. The thing here is that when this index drops below minus 4,000, it's too long to explain now what it means and why and how. I wrote a book together with my friend and partner, Kerry Lavon, the new high, new low index. You can find it on Amazon. You can find it at spiketrade.com. You can find it at elder.com. But look at this. Here's what happened in 2016. I'll put a marker here. Roman, I hope you can see the vertical line that I added. Yeah.
Yes.
Now.
Yes.
Okay. So this was 2016, 6 years ago, and you see how the bull market started. Then there was a serious correction in 2018, and here again, the weekly force index went below minus 4,000, and then bull market resumed and went for another year plus. Then it dropped below minus 4,000 in 2020 when the pandemic hit. And then when this index comes out above minus 4,000, that's the signal, I think it's the best buy signal in technical analysis. And we had that signal and the market exploded again. We had this wonderful bull market. This signal is very uncommon. It usually happens only a few times. It only happens a few times in a decade. Let me just go to the right edge. So this was March 2020. We had this signal again in May. And after that signal, S&P had a rally of 350 points, which is 10% rally. almost 10% rally, huge. And we got this signal we got it this week. We got the signal this week. So we have a major buy signal from the best technical indicator that I know of. Here you have it. So what this says to me is that even though we're in a bear market, we're looking at a major corrective rally. You know, bull markets have corrections where market declines and then goes up again. Bear markets have corrections when market rallies and then drops again. And I can even suggest to you what's the target, approximate. I call it soft target. What's the soft target for this rally? The target is pretty much the value zone on the weekly chart, which is about 4,000 plus, 4,100 maybe. So the S&P is now at, today as we speak, at 3770. So we're looking at approximately another 300-point rally, very realistic. And then things will get nasty again. But before they do, it looks like we will have several weeks of very positive action. That's the new high, new low index. You can see it on the weekly chart on the left. And then I want to show you another chart. I'll just show you a picture because it's already marked up. Where is it? Messages, contacts. It's here. It's sorry, it's not. It's where is my marked up chart? Oh, here it is. Great. So this is the chart I'd like to share with you. So this is another indicator, new high, new low. I showed you new high, new low weekly. This is new high, new low capitalization based, where I take the numbers of new highs and multiply them by a total capitalization of those new highs, and new lows and total cap of new lows. So the red line tracks the new lows, and you can see at every intermediate bottom there was a divergence. New lows shoot up and then make a lower peak, and that's the bottom. New lows shoot up, make a lower peak, and that's the bottom. New lows shoot up, make a lower peak, and that's the bottom. New lows shoot up, make a lower peak, that's the bottom. And here, as of yesterday, sorry, as of day before yesterday, new lows made a new peak, and we haven't had a lower bottom yet. So this makes me think that we will probably see a minor decline in the days, maybe a week ahead, another stab to the downside, and that's when the rally can get really going after that. Okay. So Roman, if you can put your chart back on, and let's continue with your studies. I just wanted to show this private, to share these private tools and their messages from me. So my view is that we're in a bear market. There is no sign of the bear market having ended, but there is a sign. There is a major buy signal from the new high, new low index, which suggests that we are going to have a corrective rally at this point. So I think in my own trading, by the way, I have just a couple of shorts on some crazy overvalued stocks, but all my positions today are long because I do expect this market to get stronger. So that's my view of the S&P. If I had to summarize it one more time, I would say if somebody said to me, take a position and go away until Christmas, I would have to sell short. If somebody says to me, take a position and go away for a month, I would buy. So in a month, I expect prices to be higher, by the end of the year, I expect them to be lower. A little complicated message, but lots of things about markets are complicated. Not a simple topic.
Thank
okay,
you, Alexander.
over to you. Very welcome. Over to you. What would you like to see next?
Yeah,
DAX, the German market. Look, very similar picture. Very similar picture. As our longer-term participants know, I always begin my analysis with a weekly chart, make a strategic decision on the weekly, then go to the daily and make tactical decisions on the daily. So what we see here, German market collapsed in January. You can see it on the weekly chart. And when you see this, I call it a kangaroo tail. This long bar sticking out below and then immediately returning. So a kangaroo tail followed by a rally into value zone and then a slow grind. And last week and this week, the DAX is near the lower channel line. I think that the market is like a manic depressive patient. And when the market is near the upper channel line, the patient is manic. And when the market is at the lower channel line, the patient is depressed. Whenever the market is at the upper channel line, I look for shorting opportunities. At the lower channel line, I look for buying opportunities. MACD histogram is still declining, but as soon as it ticks up, you will get a gorgeous, beautiful bullish divergence. MACD lines already divergent, showing a positive divergence. Force index shows a bullish divergence. So the German market is building a very substantial bottom, double bottom here. We go to the right side, to the daily chart. And here you can see, last week, the DAX hit the lower channel line, and look how deep force index was in the bottom pane on the screen. It rallied yesterday, stabbed down today, and look how shallow force index is here. So it's building a bullish divergence also on the dailies. So I would say the DAX may go up from here. It may spend a few more days playing with the lows and building a better bottom. But basically, I think this is the market that's setting up for a rally. It may not start immediately. It may take a few days or a week, but it looks really strong.
Thank you. Let's look at EURUSD.
The U.S. Federal Reserve has been raising interest rates month after month after month, and the Eurozone banking system keeps their rates still. They haven't raised them nearly as much. So because of that, we have a long-term downtrend in the euro. But at this point, it looks like there was a double bottom on the weekly chart, on the daily chart. But what I don't really like about it, there are no divergences of any indicators. Looking just at the bars alone doesn't do it for me. There was a very, very low bottom on the weekly chart. Now the rally is going on. I would like to see another bottom more shallow than the first. But there is no such thing, no bullish divergence. And there is no bullish divergence on the daily. If somebody held a gun to my head and said, Alex, you must put on a trade in the euro, I'd have to buy it. I'd have to buy it because it's neutral on the weekly chart and the impulse system is green on the daily. But I don't see it as a very attractive opportunity. Not as attractive as buying the DAX, the stock market index. So I think it needs more time to bottom out.
Thank you. Now I'm adding gold.
Gold had a fantastic rally in 2021. The rally ended with a kangaroo tail. Remember we talked about a kangaroo tail recently? And they work on the way up and on the way down. They basically showed that there was a buying panic, but no follow through. And whenever I see a kangaroo tail, I trade against it. So gold ran up to about 2070. It's now trading at 1830. So quite a decline. But here it does look like it's building a bottom, getting ready to go higher. It's especially well visible. The weekly chart is simple, just MACD up, MACD down. But if you look at the daily chart, you look during the latest rally, how MACD the rally in May this year, how MACD histogram rallied to a new high. So it showed that bulls were becoming stronger. Now there was a short-term bottom in gold, and you can see a very nice bullish pattern, how prices came almost to the level of their May low. They're about 1836 now, and they were about 1800 then. So gold prices are slightly higher, but look at the MACD histogram, how deep down it was in April and how shallow it is today. So it basically, and with a peak in the middle. So it looks like not the most perfect example of a bullish divergence, but it is a bullish divergence. So with gold, I would feel comfortable going long. But I would like you also to remember, I cannot tell you buy gold or buy euro or stay aside from euro or buy the DAX. I cannot give you technical. I cannot give you advice for the simple reason that I don't know you personally. I don't know your financial position, the size of your account, your risk tolerance, all these essential things. I don't know them. So I absolutely cannot tell you what to buy and what to sell. But what I do owe you, what I do owe Admirals, is to express my clear, unhedged, clear opinion. So what you see me doing while Roman is showing one market after another, I'm thinking out loud. I'm thinking out loud the way I think quietly when I decide what to trade. And I share my thinking with you. So it's a learning opportunity for you. I hope, I know it is a learning opportunity. But if you decide to trade anything that we discussed today or any other day, you have to remember the responsibility is completely yours. And that means you have to pay a ton of attention to risk management. At some point, every once in a while, Roman asks me to speak about risk management. If we have time, we'll do it today. If not, some other day. But if you decide to trade anything we look at, you really owe it to yourself to do proper risk management. It's described in my books, and of course, we occasionally sometimes discuss it here in class. Next chart, please.
Now, let's look at oil.
Yeah. Well, looks to me like the end of a bull market. I'm jumping ahead of myself, but you can see how on the weekly chart, how oil ran up and left this kangaroo tail, and then it had a double peak. A fantastic bearish divergence of MACD histogram. If you look at the January peak, that's how strong bulls were. And this is how strong bulls were last couple of weeks ago. Tremendous bearish divergence of force index also. Yesterday, oil attempted to rally. Today, it's down heavy again. Look, in fundamentals, oil is the lifeblood of the economy. And now that economy in the US and I think worldwide is on the verge of recession, on the verge of cooling off, the event is going to be less. Also, there is a major political factor. When former US President Trump said that under Biden, you'll be paying $5 for a gallon of gasoline, that's about $1.25 a liter. I did not believe that. I thought that was impossible because I was paying less than $3 a gallon. So that's about 75 cents a liter. How can we beat $1.25? And now it is $5 a liter or more. Because of the political decisions in Washington, our current president stopped pipelines coming from Canada. He created disincentives for oil drillers, and he severely antagonized the Saudis, who said, "Well, if that's how you are, we don't need to sell so much oil. We'll keep it on the ground." And so there is a shortage of oil coming from Saudi Arabia, the biggest producer in the world. So now finally our president understood that he made some mistakes, and he is flying to Saudi Arabia to kiss the behind of local prince. And once the prince is happy with the kiss, well, he's already increasing, he knows that he's going to be kissed, and so he's already increasing production. So it's partly economy and partly stupid politics. But I do think fundamentally the bull market in oil had its wonderful run, and that run is at an end. Oil has turned from up to down. But, you know, people have inertia. So people still think that, oh, you know, oil is going to go higher. I don't think so. If you're going, if I was going, I haven't traded oil futures in quite a long time, but if I was going to trade them today, I'd be shorting oil.
Thank you, Alexander. And maybe to finish this cross-market overview, I will add Bitcoin, because it was
yeah, of course.
It crashed like lower than 20K per dollar.
You know, first of all, I want to thank you a long time ago, but I mean, very long time ago, sometime in October, you asked me to look at Bitcoin on the weekly chart. And there was a fabulous bearish divergence there. When Bitcoin was trading over 60,000, you look at the previous peak. So we have higher price of Bitcoin, and compare MACD histogram, how high it was and how less high it became. Bearish divergence. And so the first time we looked at it, it was over 60,000, and today it's just about 20. So Bitcoin lost 2/3 in a little more than in about 7 months. Look, I'm a skeptic on Bitcoin. I don't trade Bitcoin. Actually, correction, I traded it once, lost $2,000, and I said, Alex, stay away, stay away. I mean, to me, Bitcoin is a gambling instrument. It has no value. You know, if you're looking at U.S. stocks, if you're looking at German stocks, if you're looking at crude oil, at gold, there is some value. I just got, sorry, I turned my head. I just got a signal that one of my stocks hit its target, which is good. But there's nothing for Bitcoin. There is nothing. It's people who agree that something is worth something, and there's nothing. So of course the huge run up in Bitcoin coincided with this whole 2021 bull market, where all the gamblers came in, and now the gamblers becoming disappointed. Bitcoin is at $20,000, and I think it's going much lower. In the short run, in the short run, if somebody held a gun to my head and said, Alex, you have to put in a trade in Bitcoin, go away for 2 weeks, I would buy it. Because on the weekly chart, you can see how it cracked badly last week. On the left on the weekly chart, there is a bullish divergence building, not finished yet, but building a bullish divergence in MACD histogram. Force index is oversold. On the daily chart, you can see the stab to the downside, the bottom, and the force index. So I think in the short run, we'll have a rally in Bitcoin. And if you have any, if I had any Bitcoin and Bitcoin went to 23,000, 24,000. I'd be just. It's a fantasy market. There is an old German fairy Brothers Grimm were two famous fairy tale collectors. They collected them in German countryside and wrote these very famous books. And there's a fairy tale about king's new clothes. This scam artist tells the king that he's going to make him new clothes, but it's very special clothes. Only honest people can see it. Everybody else thinks there is nothing. So he pretends to create this clothes, and everybody pretends that the king has clothes until some little boy says, "The king is naked," and then everybody understands that they have been had. I think this is Bitcoin writ large. Sorry. Next.
Thank you, Alexander. So I think we made an overview, let's say, across different markets. Mm-hmm. And maybe we can, before we will go to particular stocks, we can discuss another question, which is more related for a long-term investing. Because right now we see that a huge market correction, like across a lot of instruments, like in S&P and in NASDAQ. And what do you think personally? Again, we're speaking out loud. So as you were, so what do you think about current situation? Is it some sort of good moment to start adding some stocks? And also,
look, it's a good situation to buy. That's let me just go back to my screen for a second. That's all I'm doing. That's all I'm doing since last week. I covered all my shorts last week. And all I'm doing is buying, but I don't think it's buy and hold. It's buy and trade, buy and get ready to to sell in a month, in a few weeks. And I want you to write this down, because we will probably have another class a month from today, and you will say either that I was right or you were wrong. Can you please examine your mistake? You know, keep good records. I always say, show me a trader with good records, and I will show you a good trader. So keep records on yourself, keep records on me. A month from now, check it out. But in any case, I would say that between now and the months from now, I think there is an attractive buying situation. After a month, we'll see next month. I don't think it's, you know, there is an expression in America, you don't hear it very often these days. They say, these are stocks for widows and orphans. Stocks for widows and orphans, meaning these are stocks that will support a person for many, many years without management, without those people watching those stocks. I don't see any stocks for widows and orphans now, because the market is still overvalued. There will be stocks for widows and orphans. As a matter of fact, when I had a strange experience when I was in Tallinn, Estonia, my flight comes in and the hotel was going to send a car to pick me up, and there was a mistake. So they didn't send anybody. So I come out of the terminal. There is a line of taxis. I go to the first taxi, and the driver comes out and says, "Alexander Elder, welcome to Estonia," just like that. Turns out he read my book. He is interested in the markets. So while he was driving me to the hotel, we had a pleasant chat. And on the way out, as we were approaching the hotel, I felt he was a nice guy. I gave him a long-term tip. Let's take a look at that. Let's take a look at that stock, Roman, if you don't mind. You want to show your chart, or should I show mine? Who will do it?
You can show on you.
Okay. So I will, let me see, what is my screen? What is my screen? 1 second. I'll have to find it. Okay. sorry, I'm looking okay, here, oh, here it is. Okay, got it. Okay, so so here's my stock for widows and orphans, but not to be bought today. You have to wait. You have to wait for the bottom of the bear market, which is not where we are. This is the stock. As you know, I'll give you the ticker in a second. As you know, the modern economy runs on computer chips. Everything has computer chips. Cars have computer chips. Children's toys have computer chips. Your vacuum cleaner has computer chips. There is only one company in the world which makes high-end machines for making computer chips. So the biggest manufacturers of chips are TSM, Taiwan Semiconductor Manufacturing. Intel makes some chips. Chinese make some low-quality chips. But there is only one company that makes machines that will make chips in return. And it's a Dutch company. It's called ASML, like A, small, medium, large, ASML. And here you see the weekly chart of this stock. Let me compress it so we can see a little more. So it was trading at about 200. It ran up to $900 a share. It's having a major correction. It's now, as we speak, and I'm looking at live data, ASML is $486. So it lost about 50% of its price. And it's too early to buy. If you look at the weekly chart, you can see a MACD histogram has no bullish diversions. Lines have no bullish diversions. This thing is going lower. If somebody held a gun to my head and said, Alex, put in a trade in ASML and stay away for 3 months to 6 months, I'd sell it short. But I don't want to sell it short. I want to buy it and hold it for a long time. Is it time now? No, it's not yet. It is not yet. It's you want to look at some short-term stuff. Let me maybe show you a few. I'll show you a few stocks that I bought and stocks that I actually one I already took profits on. 1 second. I traded. I bought Amazon on Friday. Look at this. My favorite trading pattern is false breakout with the bullish diversions. So you can see Amazon declined in May, and it made the low below 100, about $96. Look at the bottom of a MACD histogram. Look at the bottom of a MACD lines, and this I call it breaking the back of the bear. There was a rally, and now it comes into the second bottom. And this is really a classical picture. Deep first bottom, strong break, and then low second bottom. So I bought it on Friday at this bar that I'm pointing out, and yesterday near the top I sold. Why? Because it came into value zone, fast money. I see there is a gentleman named Jonas raising his hand. Jonas, I'll try to get to you. I'll try to get to you. Another stock that I bought last week, and I haven't sold it yet, I still have it, is Apple Computer, AAPL. Look at this beauty, weekly chart. The low in May was $132.61. And the low last week was $129.04. So it was like 1.5%, a little false downside breakout. I love those false breakouts. You look at the daily chart. You know, this is the picture. You can grab the screenshot, print it out, hang it on the wall near your desk. This is what you want to trade. You see this false downside breakout last week. beautiful bullish diversions, MACD histogram, MACD lines, force index. I bought it last week. I'm still holding this thing. I'm getting ready to take profits. I like to sell. If I buy below value, and I believe that value lives in the zone between two moving averages. If I buy deep below value, which I did, when it comes into value zone, it's time to take profits. That's really my way of trading. Buy it undervalued, sell at fair value, or sell short overvalued, cover at fair value. Modest, not trying to catch some huge runaway move, but constantly grinding out this thing, taking profits. But this is what I've been doing recently. How about this? This was my purchase yesterday on Tuesday. ISRG, a famous American company that makes surgical tools. I actually met one of the guys. If you're old enough, you may remember the game called Space Invaders. Space Invaders coming in and you move your joystick, you're shooting rockets at Space Invaders. So this guy who participated in the creation of Space Invaders eventually went to medical school and he became a designer of surgical instruments. And the things that this company created was, if they want to do some surgery inside your chest, for example, in the old days, they have to cut your ribs, open the whole rib cage, and then they go inside. Not anymore. With their technology, they make 3 little cuts, maybe 1.5 centimeters each between the ribs, and they put through 2 cuts, they put manipulators with a knife and pincers and everything, and through one cut, they put a little tube for looking. And so the surgeon moves. It's a very high-tech thing, and they do the same surgery through those little incisions. And of course, it's much better for the patient, and the stock is very successful. It got beat up during this decline from $300 to below 200. I bought it yesterday, and what do you see? False downside breakout, bullish diversions, MACD histogram, bullish diversions, MACD lines, bullish diversions of force index. Go find some more. There are more. Okay, end of sermon, I think. What else? What else, Robin? What do you sent me a list of some stocks that you wanted to look at. Should we? Exxon, Google, FedEx. We can take a look at that.
Yes, we can. Yeah,
or anything else. Let me look at this guy who constantly keeps.
I think it's something just from my side to comment, because we are not allowed, let's say, to speak to our audience. So if you have any questions, you can type in chat, and later on, if we will have, let's say, some time for questions. Right. So right.
Yeah. I don't. Oh, somebody else is asking for Exxon. Okay. Let's take a look at a couple of stocks that you wanted. So Exxon. Now notice we're looking at the daily chart. Before I pull up a chart that I'm being asked to look at, I switch to the weekly. I don't want to see the daily chart before I see the weekly. So because if I do, it will prejudice my eye. I want to see the big chart, make my strategic decision on the weekly, then we will go to the daily chart for details. So Exxon, XOM, looking at the weekly chart. Whew. You know, I've been waiting for this decline for a long time, but I missed it when it happened. Wonderful shorting opportunities that slipped away. But look, kangaroo tail up, cracks, and where is it now? It's in the value zone, which is a pretty typical target for corrections. It's fairly valued on the weekly chart, so buyers have no advantage and sellers have no advantage. We'll look at the daily chart of Exxon. It's undervalued, right? So it's trading near the lower channel line. So the weekly chart, once again, fairly valued. Daily chart is undervalued. If I wanted to play with Exxon, I would buy it here. I would start buying it here about $88, $87.50, and try to take it about to $93.50. It's actually could be a very decent trade, but don't overstay. Don't overstay, because I do, as I explained before. I think that the bull market is in energy is done, is finished. I think we'll find out a month from now. You know, if Admirals was an ideal broker, it would allow us to trade in the past. We would take a chart from May and buy and sell and make a ton of money. I would pay any commission for that. But I don't think there is a broker in the world who allows you to buy in the past. We always have to act to buy today and find out whether we made or lost money in the future. No other choice. So we have to use our analysis to find what is more likely or less likely. And so I do think that energy bull market is pretty much done for. Let's take a look at another stock that Roman emailed me, Google. Oh, again, we have to go to the weekly chart first. Coming up, Google on the weekly chart. Very nice, very nice. Google had, you see, I think that during this, if we had this class 6 months ago or 10 months ago, we would be looking at all these crazy, funny little stocks which were flying through the ceiling. But now those gambling stocks are having a terrible time. Some of them have lost 80% of their peak value. So now is the time to look at big name stocks. Google, for example. Google topped out at nearly $3,000 a share. It declined in May to nearly $2,000 a share and stabilized. This last month's downdraft in the market, Google did not participate, and it looks very nice. Price pattern is rising, MACD histogram is rising, although there is no divergence, and force index has a beautiful bullish divergence. So the weekly says it's legal to buy. We go to the daily chart. You see this wonderful bullish pattern in MACD lines. Look how strong bears were in April. Look how strong bears were this month. Nothing. So Google is rising. It's already above value on the daily chart. And I think chances are very, very likely, very high that it will it will make a new high for the month. It was what the highest price in June was in the beginning of June was 2,387. It's now so it's about 130, 140 points above where it is now. Very likely, very possible. Expensive stock, but as Roman mentioned to you, you can now they let you buy fractional shares. Let's take a look at the third stock that Roman sent me before. Notice again, I'm switching to the weekly chart, and it's FedEx. Not that happy, not that happy. Last week, FedEx had a beautiful rally, gorgeous rally, and this week it opened above Friday's close, stalled. Now it's trading, today is Wednesday, it's trading below Friday's close. Not a happy picture. We look at the daily chart. A kangaroo tail up, and even today there's like an attempt, they try to rally, but they can't. So today the market is up, S&P is up 11 points as we speak, and FedEx is lower. Look at this very overbought signals on force index. So I would be cautious with FedEx. So out of the three stocks that Roman asked me to look at: Exxon, XOM, a short-term trade, possibly. Google, a longer-term trade is possible. FedEx will be very careful about. Very careful about. We have some time. Well, we're almost at an hour, but Roman, as you know, I never count time. Oh, you know. So if you have anything else, we can continue. Otherwise, I'll summarize it briefly, and we'll say goodbye.
I just want to say, ask one question regarding ETFs. So
yeah.
what's your opinion and maybe some approach, like how to, approach like these instruments, like to invest?
You know, ETFs are interesting tool. I occasionally trade one. There is one ETF that I occasionally trade. If I have an opinion about the US market, we have an ETF named SPY, SPY, and if I want to buy or sell short the US market, I sometimes do it through SPY. There is a huge number of ETFs. So if you're bullish on biotech, if you're bullish on oil, if you're bearish on Australia or bullish on Germany, you can buy an ETF for almost any idea that exists. So let's say, for example, you think Germany is building bottom. You can go look for German stocks, but then, what if you find the wrong stock? But you can go buy an ETF that's called EWG. I'll put it up right here. EWG, weekly chart. You can see, wow, look at this, look at this. So we have a downside breakout. MACD histogram is declining. EWG has to rise a little, and we'll have a beautiful bullish divergence with a false downside breakout coming, not yet. It needs to go up a little. And then we go to the daily chart, of course, then we'll start looking for a buying spot. But the point is, there is an ETF for almost everything. I have only one warning against ETFs. There are plain ETFs, and then there are leveraged ETFs. So I can buy SPY, which is a plain ETF, or I can buy an ETF which is triple loaded. So if S&P goes up 1%, this ETF will go up 3%, right? So lots of gamblers go for leveraged ETFs, and it's a very poor idea. The way leveraged ETFs are constructed is that they are correct within 1 day. They're done with futures. Those ETFs are created not out of stocks, but out of futures. So they're correct within 1 day. Once you go beyond 1 day, they stop tracking the stocks correctly. And triple ETFs are one of the best tools that exists for destroying traders' accounts. So don't get greedy. If you want to do ETFs, trade regular ETFs. Leveraged ETFs are extremely dangerous. There is one way to handle that danger, of course, if you trade very small position size. But of course, then you have to know how to manage this. So the safest thing to do is keep your distance. That dog bites.
Thank you, Alexander. Yeah, I think we covered all questions, and just some words for our participants. So later on, I will say I will explain how to leave your questions to Alexander. So later on, next class, I will present it to Alexander, and we'll have time to answer them. So yeah, I think for today we covered everything. We looked at interesting stocks. We heard your opinion about current situation in the markets. We overviewed like different markets. So I want to say a big thank you, Alexander, from your side for joining our class today. And yeah.
Thank you very much, Roman. Always pleasant working with you. I think we've been doing it for a long time, and really a pleasure. Thank you very much. And best wishes to all.
Thank you, Alexander, and have a good day ahead. And for our participants, I will just have a chance to say some words about soft, which we have, let's say, with Alexander's indicators, which we showed at the beginning of the class. Yeah, so Alexander, see you next month, in a month. So I want to say some words about indicators because we got a lot of questions, and of course we have a package which we provide for our clients who are interested to have the same indicators which was invented by Alexander. First of all, it was in the same way how you saw it at the beginning of the webinar. So to get them, we provide it for free of charge, like for all our clients who has a real account with the balance more than 200 euro. But of course, we need to understand that at least like to have, let's say, 1K or 5K, it's more safety to invest and to do trades in a lower account than the high risk to lose, let's say, all money, because normally traders start to put all money in one position, but it's of course not the best way how to approach trading. But anyway, so we provide those indicators for our clients. So to request them if you're already our client or if you are planning to be one of them, so you can send your request to elderdisk@admiralmarkets.com. Right now I'm sending this email in our chat, so you can copy, and for those who are watching us on the YouTube, so you can find it in description below the video. So with this package you will get indicators itself, like chart templates, like video tutorial how installed, and also, as I mentioned, we have already a short explanation from Alexander how to use those indicators. So we don't need, let's say, to come up with this explanation each webinar. So I will send also right now a link to the previous class where it's possible to look at his approach. So I'm doing it right now. And also I want to say that if you want to ask Alexander a question, because we have a limit for only for 1 hour to get attention from Alexander, and we normally collect all questions in advance. So if you have questions like from today's class, so I really encourage you to subscribe our YouTube channel and leave your questions in the comments below this video. So we will upload, for those who are participating today on our webinar in live, so the video will appear on our global YouTube channel tomorrow. And for those who are watching us already on the YouTube, so you can leave your questions, which I will ask Alexander next class, which we are going to have in July. So yeah, and also important thing, and we have a contest for our participants where it's possible to get a book with Alexander's signature, the last his book, The New Trading for a Living, and it's a gentleman contest. So of course we want to provide as much educational content as possible with together with real life examples, as Alexander did like a couple of minutes ago, like with sharing his entries and exits like in different instruments. But also so we want to make a present for one of our participants who participated in our contest, and the rules are really simple. So first of all, you need to be subscribed on our global YouTube channel. I'm sure link one more time here in chat. And to participate in contest, you need to do several things. So first of all, subscribe to our YouTube channel, link the video with like the video with the recording, so which you are watching right now. Suggest one trade for one asset that is trading at Admirals. And I want to remember that in Admirals we have more than 8,000 instruments, like stocks, US stocks, European stocks, like a lot of different instruments, commodities, currencies, so everything what is available, you can suggest a trade. By this, it means that you suggest a trade, and in the end of the period, we will count which trade was more profitable. And the rules are simple as it is. So who got, let's say, the most profit during this period, so those person will get the book. But we need some details, like of course, like for that contest. So in comments, please leave your instrument, show what is entry price, so when you are planning to execute a trade, stop loss level, take profit level, and date when you make a post. Because when you put a date, it's understandable from which date to count, because it can be some down and up volatility things like on the market. So yeah, so don't miss like to put things. And yeah, the rules are simple. If your position or the suggestion will be executed by take profit, so the more chance like to get. It can be executed during 2-3 days. So you can start, let's say, if you have already idea right now, so you can post it, and if it will be executed by take profit, so you will get next time this book. So we normally get reach, let's say, one person with the highest percentage of movement, let's say. But of course, it can be the position for the whole month. The time period for this contest is from one webinar to another. So we collect these ideas starting from 23rd of June, which is tomorrow for me, and till 20th of July. So it's around 1 month, like the time period where you can participate on this contest. And also it's an important thing that it's prohibited to edit comments, because if it's edited, so it can be price changed. So leave your comment, keep it as it is, and in the beginning, let's say before next webinar, I will check all suggestions, all results, and yeah, and of course, if it will be a winner, of course we have. So for another language which we have with Alexander webinar, we have a lot of participants, like each time like more than 30. So each time we send the book like to 100 participants, and yeah, and I want also to encourage you to participate on this contest. And yeah, so that's it from my side. So see you next time. Yeah, and from Ahmed question, no, it's only one instrument, so one entry, right? So just come up like with what instrument you want to suggest. Again, it's a gentleman contest. Of course, it will be much more better for yourself, especially if you earn money, let's say, on this position. But here we're not earning the money, so we just have this simple contest, so which allows me to send one of you this perfect Alexander's book with his signature. So yeah, so thank you for your participation. It was nice to see you. Thank you for your activeness. So again, like all your questions, please send us on our YouTube channel. So subscribe, and tomorrow we will add a webinar, and you will get notified, and then you can leave your question, and I will pass it to Alexander before the next class. Thank you. Thank you for your participation, and see you in 1 month. Thank you, and bye-bye.